So hi, everybody. My name is Charity. If you don't know me, I am the executive assistant with Host to Host. And I'm so excited that you guys could make it today because I think that Proper Insurance has got a really interesting presentation for us. It's going to help us drill down to where we need to be. And I am stoked to be able to moderate it and just kind of hear more about it myself. So thanks for showing up. We are recording this and we will have the recording available to you later if you wanted to review it or maybe send it to a friend because there's going to be so much interesting stuff and fun stories that we're going to get out of this. So as it is, I will hand it over to our actual moderator, I should say. I'm just the host. Our moderator today is Anthony Rollo. He is a member of our board of directors and just gives us such great advice on things we can do technology-wise to smooth our hosting experience, and just has a really good focus on optimizing the hosting experience. So I'm really excited to get his perspective on this as well. And Anthony, without further ado, it's all you.
Hey, yeah, thanks, Charity. My name's Anthony. I'll be kind of here to keep everything flowing on the rails. And I'm so glad to have everyone here. Really excited to have Nick kind of take us through risk management is really what, insurance is a component, and he'll focus on that, but there'll be other areas that he'll be able to touch on. You may have seen Nick if you've been to any short-term rental industry summits and shows. Nick and I met at Verma, I think it was like in October of last year, or one of the other ones, or all of the other ones. But
yeah.
It's insurance and risk management is one of those things that a lot of people, I would say, probably don't want to think about very often. And then when something happens and you really need to think about it, you want to make sure you got your back covered. And in full disclosure, we have all of our properties through Proper, minus the one that's not operating as a short-term rental yet, but it just got photos the other day, so we will be on soon. So Ashley will be getting a request for a quote from me probably this week.
Nice.
But yeah, so if there are questions along the way, I mean, we are a small group, but other people may trickle in. You can type stuff into the chat. If Nick sees them and wants to answer them live, cool. But we'll definitely have time at the end of Nick's presentation for people to ask additional questions. But I'd say we are small, a little smaller right now, and this is being recorded. So if you have to leave and come back, or you can come back, and you can also watch it after the fact on our channel. But yeah, without further ado, I'm happy to let Nick kick it off, talk about where he's been he's been with Proper for about 6 years, I believe, and I'll let you
nine coming up here in a couple of months now. Yeah, I got to update my bio.
Killer.
Yeah. Well, yeah, thanks, Anthony. Thanks, Charity. We Proper, we come and do these about once, sometimes twice a year with Host to Host. I remember the very first Host to Host meetup. We sent one of our agents who's still with us, Jeff, and another agent, Graham. Graham now actually is our director of claims. So he evolved from a salesperson and a fundamental deep understanding of our coverage into overseeing our entire claims operation, which is great to have that duality of experience to help walk our clients through those scenarios when they come up. And I always like to start these host-to-host meetings, again, just by thanking the group, whether you've been with the group forever or you're just getting started. And kind of my anecdotal story, if you will, is how integral Host-to-Host was in development of a coverage of ours that has been longstanding and widely used by a lot of our clients, and has been copied but not quite duplicated around our bed bug protection. It was the Host-to-Host group that brought it to our attention of someone who was in the group who had this situation that shut down the rental, and it was their only source of income. And we were quick to react and came out with our bed bug coverage. I want to say that was late 2016, early 2017. And now there's other companies that have it in their policy. And it's this group that brought that to life in the United States insurance realm. So, you know, always shout out to this group for bringing that to the attention. And, you know, we're happy to be able to bring that to be first to market with y'all's help. So today, what we're really going to talk about, yes, proper insurance, we sell insurance. Yes, we specialize in vacation rentals. My job as director of sales is not only making sure that my team can provide a seamless experience and consultation for you to help you further understand the intricacies of insurance and vacation rentals and how that functions in standard insurance market versus specialty markets. But really my role as sales director has turned into more of a forward-facing educational voice to the market. Not just pump in proper insurance and we're the end all be all, but what we can do as hosts to help make our lives around risk management a little bit easier, to maybe bring some things to the table that we maybe didn't think about in the past, and, you know, provide some vendors and some ideas that might help you in your risk management journey moving forward. So we'll go through that. And we'll go down through the line on this presentation that I have. Feel free to jump in with a question on a very specific topic, being that we are a smaller group here. I'm perfectly fine with that. So quick thumbs up. We're seeing the screen. Everything's working like it's supposed to. Got this. Okay. So over the years, proper insurance, we brought in 2 other brands. So we have, you see at the top of the screen here, we have Worcester Insurance, you have Proper, and you have this company Waybo. I'll touch on those 2 companies briefly. It's not a big part of this, but we are able, if you're in the management side, to really help you layer your risk management through specialty companies that we've built from top to bottom. So you basically have more or less a single point of contact, and you know your risk management is housed within a group of companies that fundamentally know and understand exactly what you're doing and how you do it, which makes it easier to make sure we have you covered correctly. So a little bit about why is this not going? There we go. Just a little bit about Proper. If you don't know us, we were founded in 2014. I joined the team January of 2016. Truly is the first of its kind hybrid commercial homeowners insurance policy. That doesn't actually exist in the marketplace. If you talk to a standard retail insurance agent, say I need commercial homeowners insurance, they'll look at you kind of cross-eyed. It's just the easiest way for us to describe our policy. We've issued well over 100,000 policies across all 50 states. We insure over $12 billion in assets across the entire US at this point in time. We're still a small firm though. My sales team directly is 20 people managing all 50 states. So, you know, it's still you call us, we pick up the phone, we talk to you. You still maintain that personal relationship with an agent, even though the numbers on the screen make us seem like we're this massive organization. In the insurance world, we're still very, very small. So kind of a couple of things what to expect as I'm going through this. We're gonna talk about just kind of the basics of risk management 101. We're gonna talk what I like to call the 4 pillars of insurance for short-term rentals. If you're a management entity, then these 4 pillars all relate to you. If you are an individual host operator, then 3 of these pillars will relate to you specifically. I'm going to talk briefly how insurance fits into regulation. That's been a big part of my job over the last couple of years, is working with local communities on rewording or redefining an insurance requirement around permits, because they often get it wrong and it's just overtly confusing and gives you a very narrow consumer portal on who you can get insurance from. I'm a firm believer of broadening that market, making it easier for you to shop around and find a carrier and a partner that works with you and not trying to funnel you into one spot. So I'll touch on that briefly. I'm going to share some claims example. It won't be a Nick Massey proper insurance presentation without some, SOL stuff happens, things are crazy. Here's some things that you need to think about and get insurance for. And also ways that you can potentially avoid these from happening to you. And then we'll definitely leave it open for questions. So risk management 101. Believe it or not, if you're a property manager or you're an RBO, you need to have somebody who's in charge of your risk management at your locations, okay? And that's either you or it's somebody on your team, depending on your business, right? So for me, I don't own a short-term rental yet. When I do, it's probably going to be me and my wife. One of us needs to take on the risk management role. It's probably going to be me, being that I'm in this space, right? That's going to be my job, my duty, what I need to make sure we have going on in our property. And risk management isn't just buying an insurance policy and saying, okay, I bought insurance from so-and-so, we don't have to worry about it anymore. It's much more than that with short-term rentals. Think about it with hotels. You go and stay at any chain hotel, they are providing a commonplace product. But that commonplace product is a commonplace product for a few reasons. One is they're federally regulated as such. And two, they have a team of engineers hired by Hilton, by Marriott, by whoever, that go around and inspect their properties on an annual basis to make sure that their insurance can stay in place and that they're protected against certain risks, right? Now, I'm not saying you need to go out and hire an engineer and have your property inspected that way every year. No, there's very simple things that we can learn and go through ourselves, that we're doing this every once in a while through our properties to double check things and take on that kind of onus of I need to be a risk manager. The other reason behind this, taking on that role, I like to take an example from car insurance. Okay, so why do we have to buy car insurance? It's not because the finance company I use to buy the car makes me, it's because I'm required to. And that requirement comes down through something at a much higher level called a fiduciary duty. You buy car insurance not because you need to protect your car, it's because in the United States, they see it as your fiduciary duty while you're driving your car to protect those around you, okay? And in short-term rentals, it's really no different. You're buying insurance to protect your investment, yes, but what if a guest is injured at your property and has long-lasting medical problems because of it, okay? A severe injury. Yes, you're protecting yourself through liability. That liability coverage is there to protect you so that you're not paying out of pocket and having financial strain. But it's also your fiduciary duty to protect that person for them who is injured at your property for whatever reason. Slipped on the deck, broken, shower door broke and they got cut, they got bit by a neighbor's dog, whatever. You're taking a responsible path forward by having a good, robust insurance policy that not only protects you, but is also protecting those in your community. And I like folks in these presentations to, if you're going to walk away with anything, walk away with that sense of pride that I'm not just operating this vacation rental for my own personal financial gain. I'm doing it and I have a fiduciary duty to my community. And part of that is making sure I have good insurance in place. So a couple of things with the basics. Like I said, assign a team member, or maybe it's you yourself, to inspect your properties on a routine basis to make sure it is safe for the next folks to come in. Understand your current building codes and what needs to happen. We see on the back end time and time again that if you're going to get named in a lawsuit, those attorneys are citing commercial type codes around the structure because you are open for business to the general public through Airbnb, VRBO, or your own personal website, right? So some of those codes differ slightly than a standard residential code. Primarily handrails on stairs is a big one. Work with your owners. If you're a manager, help educate them and get them on board with a risk management process. You are in business with them. They need to be in business with you, and they have some responsibility and you have some responsibility, and make sure that is well outlined with who's doing what around this property. Implement simple instructions and guidelines around your property with QR codes or digital guidebooks. Touch Stay, if you know Tyann, she's the queen, right? Touch Stay provides a great product. There's a lot of other products out there that can help you with this, because maybe folks aren't used to using a gas stove. They've only ever used electric stoves. Maybe they They've never had a hot tub at the property. They don't know how to correctly operate it. So you can build these fun little guidebooks with QR codes that go to a YouTube channel or something like that, with just a short little video on how to operate the thing. You should consult with an attorney. There is a company called STR Law Guys who do this to help build your rental agreements. This is kind of first line of defense in a risk management plan should something arise at the property, such as an injury, with waivers of liability for various amenities you may offer and things of that nature. Just because you have one property here doesn't mean it's the same as this property over here. So although there's boilerplate language, you should custom tailor your rental agreements per individual property. It's not as easy as just copy and paste. Okay, and continue to use technology and insurance to leverage your risk management. There's this new company, Dwellwell. I'm gonna have them right here. These are these really cool devices. If you guys can see them, these are just samples. They plug into the wall. It looks like a Glade air freshener. There's 15 different sensors in this thing that do all sorts of stuff. So they do noise, right? That might be something for party prevention. They do temperature control. They do carbon monoxide. They do seismic. They do HVAC control as well, where it's going to give you a health report on how your systems are working within your home. It measures electrical current as well throughout the home, so you can see if there's under service or over service of power in your home, which is one of the leading causes of house fires. We have some special deals with Dwellwell for existing proper insurance clients. I'm finalizing that right now. It's a new product, but I love this product because it's so much more technologically advanced and user friendly than anything else on the market. So, Noise Aware Minute, Alertify, Party Squasher, there's so many different ones and they all do different things. This does what all those other companies do in one device, which I think is really cool. So give them a little shout out. So in Risk Management 101, what's the very first simple step? Create a checklist of your property, okay? We've partnered with Breezeway. Breezeway has an amazing checklist that they can do. Theirs is a little bit more robust than this one that I wrote up for these presentations, but just very simple things that not only is your cleaning company checking or your turnover team checking, but you're doing an annual walkthrough if you're a property manager with your property owners, and you're checking off the list, right? Are the rental agreements in place? Your electrical system, if it's pre-1975 and you don't know what kind of wiring you have, you should probably have an electrician come out and take a look at the house, right? Make sure it's safe for the load and everything going on. You have knob and tube wiring, you have aluminum branch wiring, you have fuse boxes over circuit breakers. Like, make sure your home is set up to be safe and comfortable to the general user. Not everybody knows how to operate older wiring or what kind of load it can take. You can't run the microwave and the dishwasher and the washing machine at the same time. You're going to trip something or you might light the house on fire, So have this stuff looked at. If you don't know, it's worth the $200 to $500 inspection fee to have them come and check this stuff out and let you know what's going on. If you got wood burning amenities at your property, make sure you have your chimneys inspected, make sure you have fire extinguishers in place. Same with your kitchens, that you have these things, you have emergency contact information, the door and camera setup, make sure you just bought this house, make sure all the locks are on the appropriate side of the door. The example here is I have a 2.5-year-old daughter who just went into the big girl bed, right? And she likes to walk out of her room in the middle of the night. Well, it's my primary house. I turn the door around and I lock the door. You can't have that in a vacation rental. You shouldn't have that because there's a fire. How do we get in there? We're in a state of distress. Like, make sure everything is on the right side of the door. Smoke and carbon monoxide, handrails. The general rule of thumb on handrails, if you got 4 or more risers on the steps, interior or exterior, they should have a continuous handrail from top to bottom. That is one of the #1 call outs for an injury that we see around slip and falls, is around stairs. And it's indefensible, meaning it's very difficult for us to try and get you out of that if you don't have appropriate graspable handrails. Again, rule of thumb, 4 or more steps, should have a handrail. And then you have other non-specific items that are related to the individual property, exercise equipment, bicycles, pools, you know, these kind of checklists, saunas, waterfront properties. Do you offer small watercraft? Do you have life jackets? Do you inspect them to make sure they're not cracked, they're safe for use, waivers of liability? Do you have playground equipment? Do you go out and inspect and make sure the bolts on that playground equipment are tight? So if I'm pushing my kid on the swing doesn't come off, you know, things like that at your property, okay? So looking at kind of a duality here of risk management between a hotel and a short-term rental, because like here in Bozeman where I'm at, it's been a wild year with regulations in the city and hotels and short-term rentals and fair housing pricing. And it's been a whirlwind that's been going on, but hotels actually have it pretty easy. And the reason they have it pretty easy is because there was these big fires that happened in 1946, 2 fires back to back, one in Chicago, one in Atlanta. And then the federal government called a special council with the president, and they made rules for hotels. There's no more grandfathering. There has to be multiple means of egress. There has to be this, there has to be that, fire suppression, you name it, on and on. So they follow strict rules and regulations. They offer a consistent experience across various locations, and they're required to have a specific type of insurance. And so they have it easy because they have this very easy guideline that they follow, and then they can operate. Vacation rentals, not so much. Every single town can be different. So you have fewer guidelines and less clear risk management insurance rules. Every property provides a different and unique experience for the traveler. And unfortunately, there's no mandated insurance classification, which creates a lot of confusion. Kind of as Anthony pointed out at the beginning, you don't know till something happens that you don't have the right insurance protection. So this is where we can be on the forefront as hosts in our community to take these steps, even though they're not required about us, by not doing the bare minimum and kind of going above and beyond and setting that standard of professionalism if we're getting into potentially a fight with a city or a county around, you know, short-term rental operation in that area. So where does risk management come from on the insurance side? Just quick little history lesson, kind of go back a little bit. Lloyd's of London commercialized insurance for the masses. Insurance has been around since the Roman era, technically, but Lloyd's of London more or less perfected it in a consumer model. So as that maritime world was expanding and we're sailing to the new world and we're bringing goods and textiles and other consumer products from other areas of the world and sailing them back to the ports in Europe and England, the operators of those wanted to protect the shipment, and the mercantile business owners wanted to protect what they bought. So if that stuff didn't arrive at port, you were just out of money. So at the Lloyd's coffee shop, Edward Lloyd's is a real person in the late 1600s. They got all these very wealthy bankers, finance, business people together. And they said, in exchange for premium, a dollar amount, we're going to protect this thing, right? This property. If it comes to port safely, we keep the money. If it doesn't come to port safely, we will cover through the insurance policy what is in there. And that's the basics of insurance. And the more that you cover, the more that they're protecting, the higher of exchange of premium that you have to pay them to protect that, right? So it's not just a matter of my house is worth $500,000 and this company insures it for X dollars, and then you come to proper and we do the same limits of insurance, but maybe I have a higher premium. It's a higher premium because we're simply have more covered cause of loss on the policy, right? And so that's kind of a real basic thing when shopping on insurance, is asking, why is this cheaper? Why is this more expensive? What am I getting with one or the other, or not getting with this other one? All right, this is that transfer of risk. So in the basics here of insurance, if I saw on the poll that there was a few answers on there, it's like it's kind of bottom of priority, or I don't really know a whole lot about it. When you look at property insurance for homes, it comes in 2 parts. You basically get 2 policies in one contract. You get a property insurance policy, which is going to cover your financial reimbursement for things like fire, storm damage, vandalism, theft, that type of stuff, damage to physical property. And then liability, which protects against those claims of somebody slipped and fell and now they're suing me, trying to claim me responsible for their injury. all insurance property designations from landlord policies, standard homeowners, and a commercial style product are all going to have these two types of coverage layered in that contract. And that's the very basics of it. So kind of moving into the 4 pillars, understanding that our insurance is going to have that property and liability protection. How does this play into short-term rentals? So in short-term rentals, there's technically 4 categories of insurance. So we start with the property manager. The property manager needs to have insurance for their business operation. However, that insurance product is not filtered down to homes under management. So the property owner needs to have their own insurance as well. Standard home property insurance has a deductible. So what do we do about smaller damages? In vacation rentals, we're fortunate to have supplemental protections, either offered by the OTA or something that you buy yourself. And then we also have the guest travel insurance to protect us against things like cancellations and stuff like that. So these are the 4 pillars of insurance. You need not look further. This is what you're looking for. If you're not a property manager, you don't need property manager insurance. Check that one off the list and find what you're comfortable with in these other 3 pillars. So to touch on property manager insurance real quick, if there's anybody listening to the recording later or is in the audience now, this specifically protects property managers and their operations. So you need general liability. It's going to cover certain accidents and injuries or property damage caused by you within your business operation. You might need property coverage because you have business assets like computers and stuff like that. Maybe you own or lease an office space, or you own a laundering facility, you need to cover that. You need professional liability because that covers you against claims of mismanagement or wrongful advisement of a property. Some folks want cyber liability because maybe you're doing in-house payment collection, you're not using a third-party service for that. So you want cyber protection, your own website, whatever. And then work comp, if you have employees, you'll need work compensation policy. Our sister company, Worcester, if you're shopping that, has options around all of these. So, and commercial auto and things like that too, you might need. So some examples here of a property manager related claim that would fall on the property manager side. Slip and fall injury occurs at a home that you manage because you failed to shovel the snow from the driveway. As a property manager, maintaining the exterior of the property is part of your responsibility. So that could fall solely on you. That would be your GL policy. Someone breaks into your office and steals electronics. That would be part of your property coverage as a property manager. Or a homeowner of the house that you manage sues you, the manager, because of Legionnaire's disease contacted from their hot tub from being improperly cleaned by your team. The homeowner then sues you, the property manager, because they have entrusted you with the operations of the home. This would be an E&O or professional liability claim that would arise there. So the second pillar is homeowners insurance. This is foundationally the most important part. If you're in the audience and you're like, well, I contract with a property manager. Okay, great, you contract with a property manager, but you're in business with that property manager, and it's your responsibility to insure your asset and make sure that you have the correct insurance that suits you and your operation for that. If you don't have a property manager, this is where we want to start, okay? So you need insurance that's tailored specifically for you, the property owner, covering damages from perils like fire and water damage. Those are the 2 in the top 5 claims that are filed across the United States on any insurance policy. Guest caused damage is important, accidental and malicious. We'll get into malicious damage a little bit. It's kind of unique in specialty coverage. And then your liability protection. So policy that specifically supports your SDR operation, filling those gaps left behind by the standard insurance is essential if you're operating on an OTA platform or via your own website. So property coverage, natural disasters to guest caused damage, liability, guest caused injuries. And then what I think is the most important thing here is loss of business revenue. Okay, making sure that income that you bring on the property is still being paid to you if the property is shut down due to a covered cause of loss. Because that is going to be one of the biggest financial impacts if your home is shut down due to a claim. So to make sure you know and understand how that coverage works with the policy that you end up choosing. So a couple of examples here, natural disaster. coverage for extensive property damage, freezing pipes, windstorm, hailstorm, excess snow load causing collapse, electrical fire, vandalism via break-in, stuff like that. Obviously, guest caused injury for those claims arising when a guest is injured. A very important concept here is around the amenities that you offer. If you're a lakefront property, a waterfront property, or if you offer bicycles or anything that can take that guest off the property line, you need to make sure you're not utilizing what's called a premises liability coverage, because that is limited to the property line only. So an example here is you're pet friendly. That guest brings their dog, they take that dog for a walk and unfortunately bites a neighbor. That's off your property line, and a premises liability coverage is not going to respond. You're on your own, right? So you need to really be thinking about that in your amenity offering on what type of level of coverage is appropriate. And that would be where a commercial level product is going to be better for you, the operator, because it extends off the property line. The coverage territory is not defined as the premises address, it's defined as the United States. So as that guest goes around and out about your community, there is still protection in place. And then property damage by guest. So there's two categories. There's accidental guest damage, which nearly everybody is going to cover when it's an accident. And then you have malicious damage caused by a guest. Okay. Malicious damage is not covered by everybody and is completely different than an accidental guest damage. So they throw a big party and damage your home. The standard retail insurance markets are going to exclude that through a property entrustment exclusion or a dishonesty exclusion, because you handed the keys over to them and they did this intentionally. Proper insurance covers this. I have two other competitors that cover this. So it is limited in scope if that's something that you're really worried about on where your options might fall to cover that malicious damage component. So water damage is the #1 claim in insurance, has been forever, always will be. Water damage is extremely destructive and is nearly unavoidable at any property. We never know what's going to happen with our pipes. So this also shows us why the income component is very important. So this is an extreme case of income, yes, but to kind of get the point there, we have this beautiful luxury home in Vail that suffered water damage from a broken pipe. The water damage estimate for the repairs, I think we ended up a little bit north of 50, but right in that $50,000 range, which is a fairly common number for water damage. The big thing here is the loss of income. They lost over $200,000 of revenue because when this happened was through their peak time of renting on a luxury property that's bringing in anywhere from $5,000 to $10,000 a night on these rentals. So fortunately, this particular client insured their income level for a higher number. I believe their income limit was around $300,000 on the policy that they were paying for. And so while this home is being repaired and restored from this covered cause of loss, they're being paid gross revenue from us like they were still renting. Okay, it's not a fair market value. It's not a depreciated value on the income. It is, you make X amount of dollars per night. This is how much you're getting paid until the property is restored or your income limit is depleted. So that's a really important concept to keep in mind there if a claim arrives. So the third pillar, supplemental protection. This can come in a wide array of different things, right? So the three most common ones in supplemental protection, we'll start with the second one here, security deposits. You take a security deposit, $500, $1,000, $1,500. That guest damages the house, you retain the security deposit. Security deposits are becoming kind of antiquated in our industry. They can lead to negative reviews. They can lead to that particular person back, trying to get a back charge on a credit card for that. And then now you're fighting with a credit card company. You're trying to point fingers, and you get a 1-star review out of it. I had a poor experience with security deposits when I went to a vacation rental out here in Montana. I opened up the window in the master bedroom and the window pane fell off. And I call a property manager and they're immediately trying to get me to admit fault and want to retain my security deposit. I will never rent from that property manager ever again. I just won't. That is not how it works. The window broke. I don't know who broke it. Maybe I opened it wrong. I don't think I did, but it shouldn't matter. So damage waivers are making a big splash in this industry, and some of you may know about them or heard about them. This may be a new concept to you, but a damage waiver is a non-refundable, low barrier to entry payment that the guest makes within their booking that is going to cover a set amount for that booking for accidental and malicious damage. We introduced our company Wavo about 3 years ago that does this. There's companies like Safely, Superhog, Rental Guardian, Rental Protect. There's a handful of them that do this. And that guest may pay a single fee of anywhere from $25 to $50 for the booking. And now you're covered for anywhere from $1,000 to $5,000 in damage to your home. Well, I like to look at this as deductible insurance, really. I have a deductible of $1,000, $2,500, or $5,000. For my bookings, I am putting this small thing in. So they break a lamp, you call the damage waiver company and you get a new lamp. They break a chair, they do something like that, break a TV, whatever. Damage waiver, you're not taking a security deposit, you're not getting into that altercation with a guest, you're in control of the entire process, and they work really well. There's a lot of companies out there that can do that for you. If you're a property manager, this is really something to think about, because in a property manager model as an enterprise client, you can actually earn additional revenue by putting damage waivers in place on your bookings, because you owe the carrier X amount of dollars for this policy, and then you can upcharge it. So maybe your fee based on volume for a $5,000 damage waiver is $26 per booking, but you charge the guest $50. One-time fee, non-refundable. It's just a fee that I pay as part of my booking, and I get to keep that delta as a property manager, okay? And then the OTAs have coverage. We're all probably quasi-familiar with Air Cover. They've introduced these things out there. Our experience is that they do pay, but the bigger the claim is, the harder it is to get money in response. So I'll talk to some people who say, I love Air Cover, I've never had an issue. I'll talk to other people who go, I had a terrible experience. That's why I'm talking to you guys, because it just took too long, and they basically drugged me down the street until I decided to pull my claim away, and I ended up paying out of pocket. So that stuff's still there. It's always there. It's with every booking when you use the platform. It's not going to go away, but there's better and more comprehensive options out there that you can look at for this particular pillar. So minor damages. This is what damage waivers are used to fix. Could be appliance misuse, could be unruly behavior, could be minor damages. So I like these examples because I think everybody in some audiences that I talk about have at least experienced one of these, okay? So the one on the left, that's a dog. Dog was left in the house, dog chewed up the couch. That's a great use of a damage waiver product without going to the guest at a pet-friendly property, you know, and saying, hey, you did this, you owe me a new couch. It's like, hey, things happen, I get it. We got it taken care of because you have that damage waiver product. Broken glass top on an electric stove, and some roughhousing in the kitchen that resulted in some dented refrigerators. These are things where damage waivers come in real handy for you to get this taken care of very quickly, get fast response on a payout without having to go through kind of the more antiquated process of filing an insurance claim with your regular carrier, okay? And most of the time, these are sub-deductible anyways. The last thing is travel insurance. Okay, if you're using an OTA, it's always an option. They're out there. Generali is one of the bigger ones. There's a lot of other companies that do travel insurance. This is really meant to cover cancellations. They do cover accidental damage to a certain component, but the big thing for this is cancellation coverage. So if you have a strict 30-day cancellation policy and they have to cancel their reservation 3 days before they show up, they should have travel insurance in place to pay them back while you retain what they paid for their trip, okay? Everybody is made whole, everybody is fine, and good to go. If you're using your own website and you don't have an integration with the travel insurance company, I highly recommend that you go out and get that taken care of. You got Generali, you got Red Sky, AAA Travel Insurance, and there's a couple others out there that are pretty easy to find online, and they just go right into your website through open APIs and get you taken care of. But travel insurance is an option on almost every OTA as well. So some examples: cancel my ski trip due to lack of snow, snowstorm shut down the roads, I can't get there, shuts down the airport, I can't get there. Red tide is a big one in Florida that we see. Forest fire smoke is another one that we see come up where we get clients calling us, hey, can I get revenue protection because I had to refund the client? They're asthmatic and it's very smoky. They're not coming. They should have bought trip cancellation insurance, right? So that's an important thing to have in your stack of insurance. And ultimately that's the end of it, right? That's as much as we can try and simplify this down for what you kind of need to build in your risk management stack. Get property manager insurance, get solid homeowners insurance, integrate with a damage waiver product, and really push people to get that travel protection if it's offered through the OTA. Okay, I'm gonna try and burn through this these last couple slides. Misguided regulation is common. It's something I work on extensively here at Proper. Again, you don't have to read all this, but this is very confusing language. And if you send this to a regular insurance agent for a residential property, they're not gonna be able to get this. You don't need environmental liability. You don't need subcontractor liability. You don't need all of this coverage. This was a copy and paste from their hotel motel requirements. And what we ended up doing was change that to not have this long list of things. It's like you need to get $1 million in liability. You need to name the county or the city or whatever as an additional interest so we know you have insurance. Okay. And then that's how you get a permit. Very simple, right? Just make it easy. Almost everybody can offer $1 million limit these days. So it really simplifies that permitting process. So again, with regulations, a lot of these towns are just taking the hotel motel stuff. That's bad for us. That's bad for short-term rentals. So we need a more tailored approach to short-term rentals. And grandfathering may exist on your residential homes, but it has no place in short-term rentals. We need to maybe do some updates to our property to make it more fitting to the various types of guests we may get. You can think ADA compliance. I have a hard time going up the stairs. Should have a handrail. That's a pretty easy thing to think about. Insurance can underwrite out bad players. So if there's bad players in the community and they can't get insurance, then they shouldn't be able to get a permit and operate in that community. And I always feel the responsible, reasonable, and understanding owners and managers with a focus on guest safety and experience are going to take these extra steps, and you're not the bad players. You should not be bundled into that group when these conversations are going. And this all starts with expressing how we're taking these risk management steps to our community for these properties. So again, coming back into this little chart, hotels follow very strict rules and regulations that they have to abide by in every single market that they operate in. Vacation rentals, not so much. So we need to take this on ourselves before the big bad government comes down and tells us what to do. Okay, we can be the arbiters of our own destiny here in our communities across the US by taking these proactive steps. So a couple of examples, swimming pool incidents. Okay, there's been, I think in Arizona, it just came out, there's been 17 drownings at vacation rentals this year at a pool. Unfortunately, we've been on a couple of those. Carbon monoxide poisoning. Put in CO detectors, protect yourself there. They're cheap, they're easy. Just go to the hardware store and get some. Dog bites. If you're pet friendly, you got to make sure you have liability coverage to cover you against dog bites. Invasion of privacy. Don't have cameras on pools and hot tubs and in private areas. That should go without saying. Front door camera, ring doorbell, perfectly fine. Know who's coming in and out of your property. Totally get it. Private areas, no. Drugs missed post stay. This happens. There was a death in Miami a couple of years ago with this, and it was a very sad story. I won't get into it, but making sure you don't have exclusions if you're in that type of marketplace where that could be going around for scheduled narcotics. Unfortunately, is excluded in a lot of insurance policies. Rope swings, get rid of them. These are unnecessary things at your property that are not amenity selections. When I go to pick a property, if you don't have a rope swing, I can't select rope swing on VRBO or Airbnb. I'm still going to find your property. Okay, get rid of unnecessary risk. Bicycles, again, we see this all the time. Helmets, inspections, make sure the bike is safe for use, on and on. Bed bugs, hot tub rashes, wildlife, bats. People going, they get scared of bats, they go get rabies shots, they sue you for their medical bills. So making sure you don't have limitations around that stuff. We've seen some crazy stuff. I go on and on about claims all day long. So a couple of did you knows that I want to leave everybody with, okay? These are just some great things to think about from your new risk management journey. I hope you're going to go on after this conversation. So did we know, and this is statistical data for insurance, a residential property is going to have a claimable event once every 10 years, okay? The house you live in, you're going to have something happen that could be a claim in the next decade if you haven't already, okay? We have found with our data that is actually once every 5 years when it operates as a short-term rental due to increased use of the property. Okay, so you are buying and investing in a risk management policy that you more than likely will have to use in the next 5 years. Okay, so if you're paying $3,000 a year for a good insurance policy, that's a $15,000 investment. And then you have a similar claim to that one in Vail, 50 grand in water damage plus your loss of business income. You get that kind of return in the stock market, you're going to be like, ooh, awesome. That's why good insurance in this market is necessary in that investment. While pools and hot tubs only make up about 8% of our liability losses at proper, they are the #1 payout that we have, averaging 150 grand per claim. And that's with all the safety stuff we make you do. So imagine how big these claims would be if we didn't require depth markers and life safety rings and stuff like that around the property. These get very big, turn into very big claims. Over 50% of every liability claim that we deal with is slip, trips, and falls. About almost 30% of ER visits in the US are due to slip, trips, and falls. So the more likely thing to happen at your property is a slip, trip, and fall liability claim. How do we manage that risk? Get rid of the random rug in front of the sink. You don't need that. What's that doing there? Somebody's going to slip and fall. Take down the corners and edges of your rugs. Make sure that fall hazards are taken care of. Make sure you have handrails on your stairs, et cetera, et cetera. And then with kind of hearing some stories from Justin Ford, as well as hearing stories from our own clients and fire claims, we've seen an exponential decrease in total lost fires or massive fire losses when that fire extinguisher is in clear plain view in that kitchen, okay? You have someone who walk into the house, they see the fire extinguisher. The story that Justin Ford shares recently is a fire started in an HVAC unit that happened to be in a closet on the second story of a master bedroom. They had a utility closet up there. Husband and pregnant wife were in bed, smelled smoke, got up, remembered where the fire extinguisher was, ran downstairs to the kitchen, got it off the wall, not under a sink, off the wall, upstairs, put out the fire. This could have been a massive loss to the home, but having that clear plain view, we know where it's at. The guest can more than likely try to save your property for you. So if you don't know Breezeway, you're like, this is a lot of info, Nick. This is nuts. There's no way I can write all my notes down and keep track of all this stuff. Just sign up for Breezeway. They'll do it for you. It's very easy. It's done on a mobile app. Not only do they help with all your back-end operations, guest communication, and a bunch of other things, but that gives you and grants you access to their safety inspection when you sign up. If you do and complete the Breezeway safety inspection, and you're a proper insurance client, we're going to give you up to a 10% discount on your premium. That's on average $400 a year savings, because you're taking those necessary steps to build and have a safe property, a property that we can defend you and more than likely pay less in claims on. So you're going to get a nice, healthy credit. This is the biggest discount we offer within our company, is utilizing the Breezeway safety inspection. That is how much we believe and trust in what they've put together in partnership with us. Everybody, I feel, should be doing this. Okay, this should be the standard for every single host, whether you're new or you've been doing this for a long time, to take and put that investment in and go through that process, whether you're using my company or not. This is a massive, massive thing going on in our industry. For proper clients specifically, we have special pricing with them at $14.99 a month. I think their standard pricing, if you're not a proper client, is $29.99 a month, if I'm right, to use the software as an individual host. And again, gives you access to that safety inspection. So that's it. That's it. If you're not a proper client, you want to learn more, you want us to dive in deep on your current insurance policy, do a risk assessment on your online listing, give us a call. Talk to one of my coin super agents, as we like to call them. Have a good conversation. Send us your current policy. Let us go through that with you and show you where those gaps may fall, and show you where an investment in a more robust insurance policy can, help you in the long run protect this investment. So, yeah, I just need to get the old stop sharing button to pop up.
Thanks so much,
Wherever
Nick. That was that was great as usual. Really appreciate you taking us all through that. I think one thing I always love to add is, when I talk to people and they're like, oh, you have proper, like, that's so expensive and this and that. I'm like, you want to ask people less about what the price of the policy is, and then how the experience, and this is part of the reason the question popped up at the beginning, is like the experience of like when you have a claim, because a lot of people believe from talking to their agent that they have coverage. Oh, I talked to him on the phone, he said no problem, USTR, it says it's got rental loss and everything. And it's like understanding the nuances of that. Something that I learned from talking with Ashley and previous members of your team, really kind of gives a different view. And one thing that you didn't mention, but I think is helpful for people. I know Ashley and others have offered, they'll take a policy that you may have in existence and kind of do a comparison between what a proper policy would look like. And again, the biggest focus is kind of going to the exclusions page. Yeah, so that's a nice to have option, when you're doing a comparison. And what
Yeah.
Tell me anything else if I'm missing anything from that.
Yeah, I mean, so when we just look at general insurance consumerism, let's call it, it's call an agent, get the best rate, sign up, and forget about it, right? And then, in all honesty, for long-term rentals and regular homeowners insurance, there's such most of those products are so entirely equal due to standardization that it's kind of the way to go about it, right? When we move into short-term rentals, the biggest thing that regular insurance agents miss is the business activity exclusion, right? And so that business activity exclusion is the biggest threat to short-term rental homeowners that aren't in a specialized product. So you either have to get an endorsement that removes that exclusion in relation to short-term rentals, or you need to get a product like Propers that's custom built, because they can virtually deny any claim that happens at your property because you're making more than $2,000 a year through a business, which is short-term renting, right? And so that's the biggest thing that we try to look for when we do that comparison that you're talking about, Anthony, is, okay, let's see what you have, right? If you just send me a regular homeowner's insurance, my email back is going to be real simple. It's like, hey, thanks for sending this to me, but all I got to say is this doesn't cover a business operation. There's no enhancement on it. Now, you might send me a landlord insurance policy that has a short-term rental enhancement on it. That's great. What that does is it removes the business activity exclusion. So a tree falls on your house, there's a standard electrical fire, somebody kicks the door in, you're going to have coverage for that. Absolutely. But now what components of that policy, what gaps are in that policy that they're not covering that we do cover? Do they cover the off-premises liability? Do they cover the amenities? Do they protect your hot tub or pool liability? Do you offer a bottle of wine? Do they have liquor liability built in there? And that's where we're going to kind of build that difference that you're talking about. And at the end of the day, it's totally up to you and what you're comfortable with. So our main goal when we go through that process is not to shoot you off some super expensive premium and cross our fingers, hope to die that you're going to buy it just because it's pricey. No. We charge that because the equation of risk transfer is you're transferring more risk onto our carriers, thus they're charging a higher premium. And a great example of that is you call your agent on your auto insurance, it's like, gosh, this is just getting too expensive. And they go, oh, I shopped around and I found you one that's $75 a year cheaper. They're like, okay, great, let's go with that. What'd you lose for that $75? Right? You're not going to know until something happens. Did your liability limits get lowered to the state minimums? Did they get rid of the windshield replacement? Is your towing assistance gone? Things like that. So that's where you really need to take a little bit more time when you're working on an insurance policy to not just talk to folks like our team that know this in and out. And we know virtually every other insurance policy. I promise you, I'm pretty sure we've seen them all to go through and build that comparison. But also finding somebody that you're comfortable with to partner with you in this business. Like, it shouldn't be a 10-minute conversation. It should be a 30-minute conversation initially with some follow-up questions and some additional phone calls to make sure you fully understand what you're covered for or not covered for, right? Some people have different risk tolerance. Anthony, you may not care about guest caused damage. You do like whatever. My business is flush. I'd pay for that myself. I don't care. Fine. I totally get it. And that may be why you go with another insurance policy, right? And then vice versa. It's like, that's the biggest thing I'm scared of. And I want to make sure, I don't care how much it costs, that's what I want to be protected against. So that's what our conversations look like with folks. I've worked in different insurance firms. This is the most low pressure consultation that you can have, honestly.
We do have a couple questions in the chat. I'll start from the bottom up and then add. Vina had a question, and Vina, you're welcome to speak and rephrase if you wish to.
Sure.
It says, I have 2 suites that are run part-time at a lower rate per night. How does an owner like me afford the extra insurance?
That's, yep.
Yes.
That's it.
Yeah, so one thing to kind of set proper specifically is we replace your current insurance. Okay, so you're not paying for 2 insurance policies. You're getting a new product that covers you annually. Mortgages accepted by all major mortgages across the US. We have a loan. So one, you're already paying that number, and then we will have additional expense on top of it. The way I like to try and build this is through the income generation of the property, right? Let's look at your gross income. Let's break down your expenses and get a rough idea of net. Okay, so I'm just going to use an example. Okay, lower per night. Let's say you gross 20, 30, let's use 30,000. Okay, $30,000 gross, but you have expenses and you're only bringing in 10 grand a year net. All right. If you're paying, let's say $2,000 a year for an insurance policy now, and for whatever reasons in the rating and insured value, let's say I'm 4,000. Okay, you're still netting $8,000. So you still have some marginal profitability. I understand it's tight and that's slim. The big thing to really look at is, okay, I still have some profitability. I'm not going backwards. I'm not in the negative now. What happens when that unfortunate situation happens where my property is shut down? How important is it to cover your, call it $20,000 in expenses that are ongoing to make sure you have that right income protection, right? So granted, you may not be bringing in a ton of revenue on the net side, okay? But if you're still in profitability with our policy, plus we're protecting that gross income number to maintain and cover your expenses so you're not out of pocket on that in the event of a claim, that may be the deciding factor for you to get the more expensive insurance policy. So a lot of companies pay what's called lots of rents, which is a fair market value. You make more money as a short-term rental than most people do as a long-term. In many cases, not all, right? They're going to pay you the fair market value of rentals in your area, not what your business generates. Where proper is going to pay what your business generates gross, right? So if there's a big loss, I'm going to pay that $30,000 limit where they only may pay $10,000, $12,000, $15,000 over that same time period, right? And that offset is something to really consider when you're thinking about, is it worth it for me to increase my coverage overall or go to a specialty product that might be a little bit more expensive?
Yeah, I have a dual plan. I have a State Farm for my property, but also with my car. So it's just a bundled. Yeah, I need to actually look at my homeowner's policy exactly, because I think I've heard friends that have Airbnbs that go to their insurance broker and say, hey, or company and say, hey, how much would it cost to insure my Airbnb? And they canceled them. They said, we don't do that. And now we won't do your home at all since you're already opened as an Airbnb and you haven't gone through us first.
Yeah, hot tip is always address those questions in hypothetical when you're doing your initial search, when you're contacting your company. Say,
Okay.
I'm thinking about doing this. What do we need to do for insurance? And they'll say, well, we don't have a product. We don't insure that. So if you're going to do that, you need to go elsewhere. And that will hopefully not go to the process of, oh, you're doing it now, we're canceling you in 30 days. Best of luck. Right? Now, the other question is for you, does this property double as your primary residence?
It is.
Okay, so there's other options out there. Unfortunately, I haven't really seen a good product from State Farm when it doubles as a primary residence.
Right.
Allstate has the best one I've ever seen.
Mhm.
So what Allstate can do, so you look at us and go, okay, I like Proper, they're a little expensive, but if I canceled my home policy and moved to you, my auto insurance is now going up. I'm not getting the bundling discount, which is a massive facade to just get all of your business. Conversation for another day. But Allstate has what's called the home sharing host advantage. So when it is your primary home and you rent out suites like that, they'll give you up to $10,000 in additional coverage for that being out of your regular home. And then you can switch your auto and your umbrellas and whatever else over to them and still maintain said bundling discount. And that coverage averages $250 a year across the US with Allstate. Okay. It's a good one. And it's one that I guide folks to when, if you and I were having a conversation, you go, Nick, you're just way too expensive. It's my primary house. I don't rent that much. And because I live here, I'm not worried about too much, riffraff going on because I can stop it ahead of time.
Right.
That would be where I point you to, because that's the best one I've seen on the market for that situation.
Yeah, and I don't have a stove in either unit. I have a mini kitchen in one, and it has hot plates and stuff. So I don't have.
So that might be a good avenue in your particular situation to check out.
Yeah. Thank you very much. I appreciate that.
Sweet. Thanks, Nick. That's super helpful. I know we're running over. I did want to throw out the question that Charity had posed as a good ending one. And then if there's anyone else who wants to jump in, since everyone's still sticking around and love it. So Charity was asking specifically, and then don't forget the outro. Boom, it's popped up. Yeah, I'll pause. Why don't everyone answer the poll real quickly, and then I'll throw the question out that Charity had posed in the chat too. All right, I've submitted. So Nick, the question is kind of tangential to everything around a private host working exclusively with an OTA like Airbnb. Would you recommend a host remind guests to purchase travel insurance? So this is probably more associated with kind of people trying to cancel because of something on their own accord versus damage to your home or area.
Yeah, I mean, it's it doesn't hurt to put into your process just like a soft reminder to the guests that things happen. Every airline, when you book with an airline, they offer Allianz insurance to get your money back for $60 basically, or $45, depends on the flight. If you have to cancel last minute. If it's through Vrbo, I know they exclusively use Generali. It's there, they can buy it. I want to say it's $79.99 for the trip to insure it. I can't remember the exact number. But yeah, it's worth like reminding them like, hey, we have this strict cancellation policy and things happen. And if you need to cancel your trip or just to be extra cautious, it's worth buying this, right? You can't stop them. And if you go to any conference, I mean, you're going to see these, the Airbnb, the short-term rental pros, right? Say, don't waver on your cancellation. Like you have strict cancellation rules, stick to your guns. because you don't want to bend it. You want to help people who are in a bad situation. I totally understand that. But at the same time, you don't want to just bend over backwards and then be losing money because people are canceling last minute and you can't get a last minute booking. I've talked to some hosts who go, look, I've dealt with travel insurance and I've had people, and it just, maybe they had a bad experience, and they'll tell people like, look, we have this strict 30-day cancellation. If I can rebook the property, I will give your money back. Right. And some people work that route. That is really one of these kind of like pillars of risk management, that you need to do what's best for you, for your business, and also what's best for you with your own morals. Right. Like, I would like to think if I had an, extenuating circumstance of a death of immediate family member or something, and I reached out to my short-term rental hosts, that maybe they would help me out in some way. But I do know that there's hosts out there that I'm very close with in the industry for a lot of years who go, things happen and I'm sorry, you should have bought travel insurance, so.
No doubt. It's a nuanced world.
Yeah.
I did say we were going to end, but I want to answer Mark. Thank you very much for your last question, because I think it's important. I don't know the answer here. But since Nick had talked about Allstate, it seems like there's a $60 rider that Allstate offers. What's the validity behind that from your experience, Nick?
Yeah, I mean, so the last one I saw like a week ago for that property was $250. So that's where I pulled that number from with Allstate. Now there are some other companies. Travelers Insurance has one as well. These home sharing host endorsements that come in, they do define that it has to be your primary residence. So you got to be mindful of that. Like if it's purely a second home, that residence premises language could be problematic in the event of a claim. But these rates really kind of go all over the place, right? It could be $60 a year, it could be $50 a year, it could be $500 a year. If it doubles as your primary residence, really just check into that. I will say it doesn't really add a whole lot of coverage. Most commonly, they add about $2,500 for damage to landlord furnishings, which is defined as carpeting, appliances, wall coverings, and furniture. So it's not a ton of coverage, and that's why it's only $60, right? Or only $100 or only $200, depending on that limit. And the limit breakdowns tend to be $2,500, $5,000, or $10,000. The only one I've seen with 10 is Allstate. That's why I think it's the best. The higher limit of insurance you can get, the better you're going to be overall. So Mark, I don't know if you're with Allstate specifically. If it's $60, you got a better rate than this other person that I was looking at the other week.
Yeah, so it's primary residence, and it's I don't know if they call it a rider, but it seems pretty good. But it sounds like it's the same thing that you're talking about. I didn't know if there was like a different one that you were talking about.
Yeah, so to get a little bit more like nuance with this, check the title of the endorsement, because sometimes I see it's just a rental endorsement, and that's to long-term rent bedrooms in your home, right? And then you have Allstate, it will specifically state home sharing host advantage. It's something host advantage is that you want to make sure that you have there. Otherwise, it could just be, this is for you to long-term rent the apartment in your basement. And so just double check that.
Okay, thanks for that.
Yep.
And I'm sorry, what is long-term considered? How many days or how long?
So long-term rental in insurance foreign language is defined as a residence. Okay. So they are now taking up residence at the property. They're getting mail there. Right.
Yeah.
They brought their own stuff to the house and are staying there for a period of time. So some companies define short-term rental as less than 30 days. We specifically define short-term as not a traditional lease. So if you're doing midterm rentals for like traveling nurses and stuff, it still fits within our definition, right? And I can't talk about what somebody else's definition might be. But and some companies, they say anything more than 30 days is a long-term rental. Okay, cool. That's covered under a midterm. You can cover your midterm rentals with that if that's what you're doing. So, it really, it can get extremely nuanced, right, with everything going on. So,
Yeah, because that's actually what's happening. My upstairs unit is definitely short term, no more than 5 days. The downstairs I've used furnished finders as well, and I'm having people
Yeah.
for 3 months
So
stay.
that's where, yeah, and I mean, that's where something like, you really got to be specific when you're looking at your contract, because you have 3 different occupancy types, right? You have primary, midterm, long-term, and short-term. So one thing I'll tell you about our policy specifically is that we don't have an occupancy definition. So you're covered through and through 365, 24/7. The type of occupancy doesn't have bearing on how a claim is taken care of. But if you had a policy that had a short-term rental rider or enhancement on it, and it was defining those days as less than 30 days, and a claim arose with a midterm rental, you run that risk without verifying, of course. Make sure you go and verify.
Right.
You run that risk of that claim being denied because it falls outside of the occupancy definition.
Okay, got it. Thank you.
Yeah. Mm-hmm.
Awesome. Wow, we totally ran over here, and I'm glad everyone has been excited about asking questions. I know Nick's used to it. For sure.
Yeah.
So thank you so much, Nick. What a great presentation. Really super helpful, great expertise.